I'm your host, Dave Townsend. Welcome back to the What the Halo podcast. Today I'm joined by Ray Denis, a guest. Ray, thanks for coming back and joining the show again. A two-time guest
Thanks.
here.
Yeah, it's really great to be here again, David. Really appreciate you having me.
Yeah, of course, of course. So for folks that may be unfamiliar with you in Sandbox Wealth, why don't you quickly give us a little bit about you and Sandbox?
Yeah, absolutely. So about 3 years ago, we founded Sandbox Wealth to be an open architecture private bank. So we work with independent wealth managers that are typically non-bank financial institutions to help them and their best clients access liquidity through our network of banks. So we have a group of about 11 or 12 banks we work with that can help your clients finance everything from liquid marketable securities all the way up to fine art and aircraft and marine assets, things of that nature. And we do all of that without you having to build out an infrastructure yourself as an advisor.
Yeah, yeah, interesting. I always love the aircraft, or the yachts or whatever, fine art. So one
Yeah.
day I hope to have a champagne problem like that. So Ray, we're coming up on early February here. So one of top of mind, top conversations advisors and folks are having, obviously tax season here is upon us. So how can you help with tax? I mean, is it top of mind and something that certainly is a value differentiator for a lot of advisors? How specifically are you guys working with advisors around taxes?
Yeah, I think for a lot of advisors, this is a really busy time of year because you're planning around a tax bill. And over the last 20 years of having done this at some of the larger institutions, this was always a really active period for people on my teams because you're trying to figure out ways for people to fund those tax payments without necessarily having to liquidate assets or to utilize cash on hand or to utilize cash flow that could be better used for other purposes. The lending always sort of becomes top of mind around this time of year because of that. So
Yeah.
figuring out ways to help advisors and their clients use leverage to fund a tax bill and maybe pay that down over time with interest or dividends or a liquidity event, things of that nature to really drive some efficiency in terms of how you're deploying capital as an advisor and a client.
Yeah. Now, specifically, so if an advisor was interested, and most would probably admittedly have some sort of challenge like this, more
Mhm.
implementation wise, what is that like? What does like the engagement look like? Say I was an advisor, say, hey, Ray, I'm interested. How would we what would getting started look like?
Yeah. So, I mean, it really starts with understanding the need. So, how much does your client need? When do they need it by? How do they plan to repay it? Right. So, just kind of understanding the basics around the ask is where I would start. Understanding your client too, right? So, is your client a W 2 earner? Do they
Yep.
earn distributions periodically? Do they have that liquidity event coming up? So, thinking about the sources of repayment then becomes maybe the second thing you really want to consider, and then you start to get into the solution, right? Because at that point, you've already
Yep.
defined the problem, right? You need a certain amount of dollars. You know how you're going to pay it back. You know what your client, and their balance sheet look like. So then you can start to advise a solution around those things. You're calling up a specialist like myself who can theoretically help you and your client to devise that solution would be how I would start as an advisor who maybe doesn't
Yeah.
know a lot about banking and lending, right? And, we could help you walk through just the particulars, right? How much does a client have in terms of cash on hand? What does their balance sheet look like as far as marketable securities against other maybe less liquid assets? Trying to figure out the best approach for finding, a solution around how much they need, when they need by, and putting all that in a blender and coming up with a loan proposal. And we would work with our lenders, whoever was the best fit for that particular situation, to try to
Okay.
streamline and speed run that process for you on your behalf.
Yep. Well, I think the optimal word there, as I would describe, is bespoke. There's really
That's right.
no off the rack solution. Every client is different. Unique is every challenge is unique, and so it sounds like you guys really help cook up some really customized solutions.
Yeah, we've seen enough of these opportunities over the years to get you an answer pretty quickly in terms of what's feasible and what isn't, and what the timelines ought
Okay.
to look like, and all of these things. So while it is bespoke, I think it's also backed by a couple decades of history in terms of having done this a few times. So yeah, we try to
Yeah.
bring that to every conversation in terms of trying to get you to the right answer as quickly as you can, because we're already into February effectively at this point, and depending on when you hear this, you'll be a little bit closer to April. So you really want to start to you get comfortable with the solution as early on as possible because it takes some time to put into place. But the solution itself, we should be able to come up with something for you fairly quick.
Yeah. So I recently bumped into a an advisor trends survey, BlackRock, and let me pull it up here for everyone. And some of the sort of those challenges where advisors, what personalized services are they offering? And two of these here really kind of jumped out at me as liquidity events and of course lending really fit into your wheelhouse here. And now, more specifically, a number of these items do fit into what Halo now, what we call our advanced wealth solution suite. And of course, you and Sandbox Wealth are part of that. But two of these immediately jump out where Sandbox steps in here around liquidity and, of course, the lending component. But specific to liquidity, how can you guys help? How can you guys help advisors and their clients raise liquidity?
Yeah, of course. So, I mean, first of all, think about the liquidity event itself. So, you might be a business owner, right? You sold a business in 2025 and now you've got a tax bill to pay. And, starting to think about how you want to pay that, you could theoretically use that liquidity itself to finance the tax payment. I think some would argue that there's probably better upside if you were to invest that capital and borrow instead. So that would be one sort of avenue we would explore with people in most cases, is to say, think about deploying all that capital, being in the market as long as you can be, and being able to offer yourself a little bit of a buffer against any sort of market movement because you've got that capital to support a loan, right? And you could then
Yeah,
use that loan to pay that tax bill and repay the loan over time with things like interest and dividends and other cash flows that you might be generating, instead of having to use that liquidity up front to fund the tax payment. So that's one thing we really wanted people to think about. May not be the right solution for everybody, but that's a solution that we look to have a really intelligent conversation about early on, because
yeah,
that's, theoretically the most efficient way to go about it. And there's other opportunities, right? Maybe you're looking at other illiquid assets on the balance sheet to fund the tax payment because maybe you don't want to be subject to things like, the market movements that could trigger a margin call and things of that nature. So we could use the rest of your balance sheet too to explore other options, whether that's a second mortgage or funding a, less liquid asset like private equity or hedge fund interests. Really try to take a holistic view in terms of what the solutions are.
yeah.
But using that liquidity up front is, very often the last suggestion that I would make to a customer. It's not just because I'm a lender. I feel like it's truly the best and most efficient use of capital to say invest in.
Yeah. Well, one interesting, you were telling me a story where, and I'm sure when you founded the company, obviously, I'm sure part of the motivation was to help advisors. And one area that you might not necessarily, jump to right away is around advisor growth, right? And you have a number of really kind of uplifting stories about how you're working with advisors and something of a growth engine component here. And it's just not a lever that you would ordinarily think that someone would pull when you think about growth and what levers advisors can pull as they try to stimulate growth. So as advisors are kind of like firming up their growth plans here heading into 2026 and beyond. How are you guys seeing people out on the front lines using this?
Yeah, I mean, again, we've been doing this a while, just, with Sandbox for the last few years in terms of having discussions with advisors around how much easier it is to have a discussion around saving a client money on a loan than it is to ask them to, manage their investments, right? Instead of asking for money, you're giving it away in a manner of speaking, right? And so the conversation just kind of becomes a little bit more, streamlined. It's a little bit more frictionless when you can offer strategies around how to save a client money or to enhance the loan structure that they have currently in place. So that's the first thing, right? So you want to give an advisor another tool they can use to find the right solution for a customer and not really just focusing in on the asset side of the equation when you do that. And, there's this sort of like really great knock on effect of approaching things that way, because you can help an advisor gather assets by virtue of doing it this way, right? By
Yeah.
virtue of starting with the loan, you sometimes need to bring over investment assets to secure that transaction. And so we're working on a case right now where it's a large loan transaction, and advisor's been speaking to a client for a number of years and hasn't been able to move the needle in terms of getting that account moved over. But the loan is that wedge, right? So because that loan is something where we're going to be able to finance a 9-figure asset for that particular customer, we're going to be able to bring over that asset for the advisor to manage. So now you go from, again,
Hmm.
multiple years of working with
Yeah.
a client, trying to build that relationship. And that relationship is there, but in order to be that catalyst to drive assets being moved over to manage, it really was the loan that that triggered that response. And so that's one anecdote out of probably dozens or hundreds I could tell you over the years of how we've helped advisors bring over new business by virtue of being able to do a loan against a security or a house or a commercial real estate asset. It is
Yeah.
absolutely a growth engine. It's not a utility or commodity when you do it right. It's a way to really drive organic and growth and drive home and deepen your best relationships.
Yeah, what's interesting about it is that obviously folks, high net worth relationships and more, let's call it like private bank relationships, have had access to stuff like this for some time. And what's interesting is when you start talking about, I don't want to say everyday accounts, right? But something less than folks who may not be in a private wealth, management kind of scenario, is that you can help sort of the everyday. I mean, certainly you can help high net worth as
Yeah.
well as more modest accounts. So the first thing that jumped out at me is when I heard about you guys and I was introduced. And of course, you're a scholar and a gentleman. So, but I thought it just seemed kind of too good to be true. I'm just like, well, how is it they're doing this for something that doesn't have, a lot of zeros behind it? How can they possibly do this? And especially with some of the asset classes in maybe wonkier balance sheets out there, I'm like, well, how could they possibly do this? So I don't want to don't give it away, but like maybe what is some of that secret sauce that maybe you sets you guys apart relative to how this has traditionally been delivered?
Yeah. Well, I mean, every bank isn't great at everything. I think even the bankers at those banks would tell you that, right? And I think the
Okay.
real magic in what we do is that we have a lot of different partners that are good at a lot of different things on the whole, right? But individually, they've got very deep specializations that they can focus on, right? So the objective for us is to find the right home for every opportunity because there's a lender out there that's willing to support you from a client standpoint and making sure that we can cover a broad surface area of opportunities and clients as a result because we've got that lender network. And that's not a network you can just kind of like pick up on the phone and call people
Yeah,
up
yeah.
to build those relationships too. So like part of this is just kind of relying on our track record over the years and building relationships with folks and having done this in practice, a number of different times in a number of different places helps sort of build the credibility that you need to go out there and build that sort of network. So you're right that there is sort of like there's not real magic to this. I mean, it's decades of building the right relationships with the right people, learning the right things,
Yeah.
and doing things the right way will ultimately help you build that credibility overall.
Yeah, I like that. So, obviously, without getting into terribly into economics, obviously the Fed had another meeting yesterday and paused. So when advisors are thinking about like you're looking at like interest rate environment, and I'm talking from
Yeah.
30,000 feet here. So obviously clients would be wondering, hey, what's the Fed doing? What's going on with rates and so forth? Given the current market environment, and again with sort of interest rate, how is the lending and how are you advising clients if somebody who's asked what's the temperature out there right now, right?
Yeah, I mean, I think, we built our business to be counter-cyclical. So what that means is, when rates are low,
Okay.
you're going to see a lot more lending activity. And when rates are high, you're going to see a lot more cash management and treasury management activity. And so our
Yep.
objective is to be sort of agnostic as to the rate environment. You just kind of react in terms of how you deploy your go-to-market engine based on where rates are. So, we try not to be, sort of forward-looking when it comes to this. As a result, the goal is to be
Yeah.
reactive and the way we're seeing things shake out now as rates start to come in is, yeah, there's going to be a lot more opportunity on things like residential mortgages. There's going to be an opportunity to find that carry trade opportunity where the markets are appreciating and you can earn a spread between the market appreciation and what you're paying on interest rates on any sort of line of credit. That opens up the door to more premium financing opportunities if you want to finance your life insurance premiums or the cash surrender value of an existing policy. There are
Interesting.
probably going to be more opportunities to do things like that. So, reacting to what we view as declining rate environment opens up the door to some of those conversations that might have been dormant over the last 2 or 3 years. So, trying to think about how to approach 2026 through that lens has been part of our sort of challenge in a good way over the course of this year
Yeah.
because there's going to be a lot more opportunity to support people that want to take advantage of those opportunities.
Yep. All right. So for as a closing thought, and I'll give you an easy one here for you. Anything heading into 2026 here? What might surprise you? What's something that you think might surprise people here?
Yeah, I mean, well, I mean,
Financial markets, global, macro, whatever, open ended here,
yeah.
right?
Well, I mean, I think the only certain thing in any sort of macro environment is uncertainty. and the
Yeah,
ability
that's
to
true.
react to a lot of these things. I mean, you can never really predict. You can try, to predict what's going to happen, but from our seat, like our role, like I said about rates, is to help clients navigate through the near and intermediate term while thinking strategically at the same time. So,
Yeah,
what I would tell anybody in this environment is just to be cognizant of all the different potential outcomes, to be prepared for as many of them
yeah,
as make sense, and not to try to, sort of be biased towards any one of those outcomes because inevitably you'll be wrong. So it's hard for me to
yeah.
come in here and tell you like one thing's going to happen because I don't believe in being right about those things all the time. So our job is to try to react as quickly as we can and to offer the best advice we can given those macro situations.
Yeah, yeah. I was reading this interesting piece yesterday or recently talking about hedging and how
Yeah.
most people, I don't want to say get it wrong, but they were talking about how, like, if you're hedging after the fact, it's too late. Like, it's how
Yeah.
most
Right.
people are very reactionary, which makes me, I guess my point is that it's probably better to have a conversation with you earlier in the process than it
Oh
is
yeah.
later. So with that said, is how do folks get in touch with you? What does first steps look like?
Yeah, I mean, so we're fortunate to be partnered up with Halo, and so if you have a relationship with Halo, working through your sales manager there to get a hold of us, we are integrated into the platform. So if you want to reach out directly, we'll find out about it through that lens. But you can reach us by going to the website, go to sandboxwealth.com, find me on LinkedIn. We're super accessible, we're responsive. That's one of our 5 pillars. So if anybody wants to get a hold of us, you'll hear back from us if it makes sense.
Beautiful. Well, Ray, we appreciate your time today as always. And please hit that like and subscribe button. And we'll talk to you again, Ray.
Thanks for your time, David. Thanks for having me on.